Turning to some grim developments here on the coronavirus. Now, the death toll has surpassed 1,000 people in mainland China, with more than 42,000 cases reported. We have Anjalee Khemlani back with us with the latest details on this. And Anjalee, where do things stand right now?
Things still stand just about where they were yesterday. Honestly, this is almost like a day-by-day incremental, just taking a look at what is happening. They're still trying to figure out a lot of details about how the virus spreads. There are reports out there that it can spread in as little as 15 seconds of being in contact with someone, or just being within the area of them, and it could take days to show. You could test positive for the virus without having any symptoms. So there's a lot of information still, known, still getting to be known. Meanwhile, we have our 13th confirmed case in the U.S. in San Diego yesterday, and we have, like you mentioned, the death toll has surpassed 1,000, so it's getting pretty grim in China. Meanwhile, companies are just bracing for what this means in terms of global economic impact, but more importantly, on the business by business and sector by sector impacts.
Yeah, that's what I wanted to ask about, because we've had a number of companies mention the coronavirus in their recent earnings reports, just in terms of how it could impact their various businesses. And it's really been across almost, don't want to say all industries, but majority of the industries could be impacted from this.
Absolutely. And we already know that for a fact, travel, leisure is definitely getting hit. We know that luxury brands are definitely concerned. What you've seen is shutting down of stores, and so we can't calculate necessarily what that means just yet. And so that's why it's really important to remember that while we are going to be keeping track of all these companies, we won't know the actual impacts until possibly Q1 is over. So once that is done, then we'll be able to tally the actual numbers. But right now, definitely travel and leisure. We're definitely looking at the cruise lines, the airlines, some hotel brands. Surprisingly, some did say that they were not going to be hit, like I think Hilton earlier mentioned they weren't going to be. You have all the restaurants that are really big in the area, American brands that are really big in the area, companies like the tech companies that are waiting for manufacturing to start up, car companies that are waiting for manufacturing to start up again. So it's just a mixed bag, and a lot of it is still really unsure, because even when you talk about the airlines, they don't have necessarily a cohesive plan, not the way that the cruise ships do, and what their policies are and what their restrictions are going to be. And even then they're running into trouble, because some of them have even been rejected when they're asking for permission to dock. They just have been rejected from multiple ports in the area. So there's just a lot of confusion going on right now.
It certainly is, and it's a developing story that we are watching here on Yahoo Finance. Anjalee, thanks so much.
Of course.
Well, joining us now, just in terms of what the market reaction will likely be, or what it has been, I should say, to the coronavirus, we have Jeff Saut, Chief Market Strategist at Capital Wealth Planning. And Jeff, when we take a look at the implications, what this means for the U.S. equity markets, we saw a reaction. There was a little bit of a sell-off last, 2 weeks ago when it was initially reported. Markets then bounced back. How big of a threat do you think this is to the U.S. markets?
I think it's not that big a threat to the U.S. markets. I think it's more of a threat to the Asian markets. So far, the stock market, other than that Friday where we had the 600-point sell-off in the Dow, hasn't really paid much attention to the coronavirus. I mean, individual companies have, but the overall stock market looks to me like my models are showing we get an energy peak this week. So I would not be chasing stocks right here on a short-term trading basis. Longer term, the secular bull market is still firmly implanted.
Yeah, Jeff, what are you doing at this point?
Well, I bought some FLIR today. FLIR's got this automatic braking system that uses thermal imaging that looks 4 times farther ahead than the headlights at night. And if there's a person or a post or something like that in front of you, it stops the car. It's going to be a big deal for FLIR. The other stock I bought in recent history is Mesa Airlines, MESA. They hired the ex-COO from SkyWest, which is the best contract airline to my knowledge in this country, and they hired him to be CEO because Mesa's had some issues with lost baggage, late arrivals, late departures, and the thought is he's going to fix it. But so far, I'm down a little bit in that position.
Jeff, when we take a look at where the markets are trading, you mentioned the fact that investors have mostly been shrugging off the latest news in terms of the coronavirus. When you take a look at the levels that we are at currently, do you think the market is overbought at this point?
I think the market is overbought on a short-term trading basis, and markets can correct an overbought position either by going sideways or having a marginal pullback. And we certainly haven't been going sideways. I mean, we've traded out to new all-time highs. There have been some divergences in the NASDAQ between price and breadth. And there have been some divergences with the Russell not making new all-time highs. So, there are some warning signs here, and the fact that my energy model or internal energy model is saying there's an energy peak this week. Again, on a trading basis, I would not be chasing stocks right here.
Jeff, just on a fundamental basis, let's talk about that. Do you think it looks strong, or is there still some excessive optimism, do you think, in the markets?
On a short-term basis, the optimism is excessive on the upside. But I'm using $177 for bottom-up operating earnings this year, and I think a 20.2 multiple is, in this interest rate environment, is probably the right price-earnings multiple, and that gives me a price target of around 3,600 on the S&P. So if we get we got a 3.6% pullback since the January 17th peak. If we get another pullback, I think the pullbacks are for buying, because I think the secular bull markets last 15 to 20 years, and we're 10 years, almost 11 years into this one. So I still think we've got 5, 6, 7 years left in this thing.
Jeff, what about the earnings so far that we've seen? We've had a number of companies report. Handedly, a good portion of them are beating the street's expectations. Are earnings as strong as we need them to be at this point?
They're probably not as strong as we need them to be, but I think they'll hook up at the end of this year, or going into the second half of this year. I can't remember the exact numbers, but I think it's something like 66% of the 900 companies that had reported as of last Friday beat the estimates, and something like 64% of the reporting companies beat the revenue estimates.
All right, Jeff Saut, thanks for joining me today.
You bet.